In this video, traders, we look at common mistakes that new CFD traders make. Stay tuned. Hey guys, a very warm welcome to you. Thank you for joining me. So if you're a new trader, new to trading CFDs, you just got your account, by the way, go and check out a video we did. Talked about some of the things you must ask your broker before you open an account. But if you're starting out trading, these are the most common mistakes that CFD traders make. By the way, guys, if you like this kind of stuff, you like your CFD trading, you like your markets, you like all things trading, then make sure you are subscribed to the channel because we have regular uploads. We talk about mindset, strategy, operational stuff, studying great traders, the lot. So if you're into your trading, you're into the markets, then hit that subscribe button. And while you're down there, check out our channel sponsor. There's a link to those guys in the description below. All right, let's go. So the first thing is not having a plan. Now, you don't have to be crazy about this. Talk about plans quite a lot on this channel. Those of you who are kind of been here a while, appreciate your support, by the way. No, plans are a big thing. But it doesn't have to be big. It doesn't have to be complicated. It just has to be right. I'm going to trade this market during this hours, and I'm going to look for this setup. That couldn't be it. So in other words, I'm going to trade the FTSE 100 shares between the hours of 8 a.m., 10 p.m., 3 p.m., 4 p.m., whatever it may be, and I'm going to look for moves that are overextended to short back. That could be your rule. Could be, okay, I'm going to swing trade, which is most likely what you're using your CFDs for, after an earnings report on a company. So I'm going to wait until a company has had earnings, and I'm going to use that as a catalyst to potentially look for a 4 or 5, 6 day move, or whatever it may be. But the point is having some kind of plan and the risk management in place as well. Number 2 is overtrading. Big one this. Many people fall into the trap. I fall into this trap before when I first started out, and you just think because you've got this new thing here, you can go long, you can go short, you can buy this, you can buy that, you can sell. There's so much stuff. You overwhelm with opportunity, and of course you overtrade. And overtrading will just kill an account, because if you don't have a strategy, you don't have an edge, all you're doing is gambling, you're getting emotional about stuff. It just never, ever, ever. I know anybody who overtrades and has said that's a really good thing for them. So don't do it. And 3 is not using stops or having some sort of risk management strategy in place by some sort of hedging. So stop loss takes you out of the position if it's moving against you. And I see many guys saying, hey, you know what, it's gone this way, I'll hold it, it'll come back. And the trouble is you get away with it many times, but the one time you don't, you end up sitting with a massive loser for a long period of time, and that can wipe you out. So make sure you have some kind of exit strategy if things don't go the way that you planned. Number 4 is chasing out a fear or fear of missing out, we call FOMO. So very often your traders will, I'm going to buy this, I'm going to buy this, and it starts to go, and they kind of get caught up in something else, especially if you're kind of it's not your full-time career, get caught up in other things in life, come back, I knew it was going up, I'm still going to buy it, and you've missed the sweet spot. It's already had a 3-day move, you're buying it, you're going to have to sit through maybe 3 days of pullback before it starts to go again. So just be careful you're not chasing stuff. I see that quite often. A 5th thing is similar to this, have your stops, but having stops too tight. So in other words, people try to mitigate risk by really having stops too tight. They're like, I don't want to risk too much, I'll put my stop right up. But of course, noise in the market has kind of normal noise, will just ping you out of your position, and then when it's ready to go, it will go. So you've got to have it wide enough so you don't get taken out by normal market noise, but also, not too wide that you're giving it too much room. So it's a fine art and something you've got to kind of master on your journey. All right, number 6 is getting too greedy. So many traders will, they'll hold a position, it's gone a big way very quickly, it's going further, it's going further. You think it's the best thing ever. Now, markets very rarely go up in a straight line. There are some examples out there, but they're the exception to the rule. Most of the time, markets are going to push up, trend, they're going to backfill a bit, maybe they're going to rotate, sit in a range bound environment, have a mean reversion type setups and strategies for a while, then they might go again. So if you're too greedy and you're looking for more, not only you could potentially give the profit back, and I'm not saying that you shouldn't hold on to trades for as long as you can, but being greedy and kind of looking at it objectively and going, how fast it's moved. Not far enough yet, it's got some more, that's fine. So it's moved great, but I think it's going to go to the moon. Start to consider if you're being greedy and making decisions from a place of greed, or whether it's, logic and sense about what the market's doing. I think it's trading too much size. Big one this. Goes with over trading, guys, very, very common. Because of margin, we think, I'm going to trade more size, I'm trading okay, let's put some more money on the table, I want to be right when I'm right, I really want to make a killing on this trade when I'm right. Of course, when you do that, that's the time that ends up wiping you out, ends up going against you, and of course a double-edged sword. If you've got big size on a losing trade, it's a big loss. So you've got to weigh up the pros and cons. Margin is useful, super powerful tool when used right, but super deadly when used wrong. The eighth thing, guys, I've got for you is meddling with a trade. How many times do traders put a trade on, do all the homework, prepare the trade, get the entry, sit there, and then they get bored. They start twiddling their thumbs. They're like, or maybe I'll just come out of it and come back in again. Or maybe I'll take a bit off. Or maybe it's gone too far. And they meddle with the trade. Listen, if you're trading a CFD, you're looking for a 3-4 week move on the trade, then if it hasn't stopped you out, hold the position. Don't meddle with it. It's giving me a little profit after a day, because you're never ever going to allow the trade to mature and give you those good winners. Now, of course, if the story has changed, if something fundamentally or technically has changed on the stock or the CFD you're trading, whatever the underlying is you're trading, then of course, you can have to sit with the trade forever. But many times we meddle with it, we adjust with it because we're bored. And sitting on the hands is often the most profitable thing to do. So anyway, guys, there are 8 common CFD trader mistakes. What are your mistakes? Have you started CFD trading and you've made mistakes? If you have, stick them in the comment section below. Maybe it can help some others who see them to avoid them. Take care. I'll see you in the next video. Bye-bye.